It's been pretty obvious that Tesla stock price for the last 2 weeks has been driven by a very large seller. We know that this is not Elon Musk because he's in a blackout period until mid-January. And whoever is selling this time makes Elon look like a baby. So who is it? Today I want to go over the 3 main candidates and then I'll tell you who I think it is. And stay until the end because I'm going to review who's buying all these shares on the other side of the trade. Hint, it's a big fish. Okay, so for the seller, luckily for us, there's only a handful of people or entities that could actually pull this off. Elon sold 20 million shares in 3 days and that caused a 10% drawdown in the stock. But this new seller has caused a 25% drop after that, even on higher volume. We can guess from that correlation that at least 50 million shares have been sold. This feels similar to when TSLA sold their entire stake in the first half of 2019. They sold their 10% stake in Tesla for $5 billion when that could have been worth $100 billion only 2 years later. Needless to say, somebody got fired for that mistake. Funny enough, it is possible that TSLA is selling again and making the same mistake today. And the reason for that is because they reaccumulated 47 million shares as of Q3 for this year. Now, the other possibility is Capital World Investors, which has had a massive Tesla stake for many years now. It's not only on their main fund, but it's also on a couple of their mutual funds as well. Now, if this is Capital World Investors dumping their entire Tesla position, we might be a bit of a way before we hit bottom, since they control more than 150 million shares as of last quarter. Now, the third option is Bailey Gifford. Well, I don't think they have enough shares to cause this move, since they only had 28 million shares as of last quarter. So the only way it could be Bailey Gifford is if there's more than one entity selling big. So for example, it could be Bailey Gifford and it could be TSLA at the same time. That could very well be happening. The good news is that this Tesla price crash has been caused by one or at most 2 entities that changed their thesis in the last, 2 weeks. So as long as it's not Capital World Investors, it should be mostly over by now. Now, who do I think it is? Now, I personally think it's TSLA. They have a history of making bad decisions and selling really good investments and really good companies for the long term. TSLA is the perfect example of smart money making dumb, irrational, emotional decisions. But now that we have a good idea of who was selling the stock, the question is who's buying on the other side of the trade. Now there's a theory going around that has been Warren Buffett and Charlie Munger buying Tesla stock now. So let me break down this possibility real quick. The 2 main arguments going around for why Warren Buffett and Berkshire Hathaway are accumulating at these prices are: the first one is that Elon on a Twitter space insinuated that Berkshire Hathaway was gonna buy Tesla next year. He did this on December 22nd, but I think this is only wishful thinking on the part of Elon. This is not a really good argument for why Berkshire Hathaway might be buying Tesla. The second argument is that Charlie Munger has been selling out of his BYD position for months now. In case you didn't know, BYD is the second biggest player in the EV space. They sell mostly in China, and Charlie Munger had a big position on BYD for years now. He actually made some money on that, but with the conditions of China, he's selling out of that completely. Now this is an argument that has a little bit more legs to it, but it's not quite enough to convince me that Berkshire Hathaway is buying Tesla right now. Now, I think there's a bigger indicator that somehow every Tesla YouTuber missed for some reason. Charlie Munger went on an interview 1 or 2 months ago on CNBC and talked very nicely of Tesla and Elon Musk. If you remember, in February this year, he actually was not very complimentary of Tesla or Elon. So what changed? Well, the reason is you don't talk badly of the stocks that you actually own in your fund. And Becky Quick from CNBC didn't press him on whether he was actually buying Tesla for Berkshire Hathaway. I think this talking point was actually off the table prior to the interview taking place. They discussed this. And the reason for that is because they'd rather be accumulating here at these levels than Tesla being at a $1 trillion valuation. Makes perfect sense. And to top it off, Warren Buffett did the exact same thing with Apple a couple of years back. In fact, Apple was about the same market cap that Tesla is today. So it's a perfect parallel. Same as with TSLA, I think an indication of what funds have done in the past is a good tell of what they're gonna do in the future. So I think this is pretty believable, but not for the same reasons that the Tesla community is claiming it to be. If you guys want me to break this subject in its entirety, tell me down in the comments. There's a lot to unpack here. Now, obviously this is all speculation, but we'll find out in a month and a half when all the 13Fs start being filed. I think it's mid-February. But now, how do we know Tesla has reached the bottom? I broke down the biggest bottoming signals that you can get as a retail investor without involving any kind of sophisticated insider information. So if you like this video, you probably like that one as well. So anyway, thank you very much for watching and I'll see you next time.